Alright, let's fucking get it. Let's fucking get it, my boy. This mic has made me very sad today. That's all I know. Huge disappointment. Alright, so we're gonna start this off with the proper. Yeah, that's nice. That's actually not bad. I'm not even fucking using the mic. That's crazy. Alright, so right off the bat, we just came right over here to investing.com to see some of these news articles and things like that. And I definitely want to see what it's talking about as we move into this new year. So, first article title is Gold closes in on 6 month high. Markets look to smaller Fed rate hikes. See, 11 minutes ago, smaller Fed rate hikes, which could push gold up. Stocks in 2022 with a thud, treasury yields, oil prices rise. Supreme dollar rules the roost in gold market. Okay. Anytime slower, Bitcoin. Honestly, that first one 11 minutes ago looks really good. So let's go ahead and tap into that. And we ain't even really actually. So I did an analysis on the 4 hour time frame, or actually my fault, on the higher time frame, like weekly, daily. So I have a higher time frame analysis already out. But I'm really this analysis is really for. Yeah, I love that. Look at it. Look at it. Look at that. Look at. You know what? We will literally do a fresh analysis. I'm not worried about it. So this is what we are gonna do. Without literally any technicals, my fault, without any fundamentals at all in motion, we're just gonna do a quick higher time frame analysis. You know, I really want this line kind of thin. Yeah, I want the thin line. Alright. Now it structurally, respectfully, structurally, I know you got this wick and this wick, but I just want to mark this out right here because this is the structural level. But I can give it the first, intermediate area. I don't want too many lines, so I already have the resistance and one and potentially the second level that it could reach. Just know that, right? Now you're gonna need that immediate weekly low candle marked out, and then pretty much just the structural level. If I hit that daily, what we have here is a very nice, clean, clear resistance. I wonder if I want to extend rate. Mm-hmm. I wonder what yellow would look like. I kind of like yellow. There's a lot of other levels here. Literally just Wakefield. Try that a little better. I see Wick Fillington to the left. We're still in the daily time frame, which is cool. The daily wanted to continue up today. It has about 70, 80 pips. That's cool. And the next one you have here, here. So yeah, you got these like intermediate. I would even just bring this down. Yeah, I'll just bring that down there. And from a higher time frame, that makes sense. But from a lower time frame, we'll probably need at least this level marked out where it was resistance here. You know what I'm saying? You have resistance at this motherfucker. Then you have support at this motherfucker. So at this point, Femi could probably, yeah, I love it. So as of now, that's definitely a good target. I like that. I like that a lot. Candlestick body closes. You know, and then on the 4 hour. So this is the first 4 hour candle, not only of the day, but this is the first 4 hour candle of the year, my boy. And we got a immediate break of structure. Wow, that's crazy. But I love it though. It really opened with this candlestick right here, just straight push up. So it really did everything in the first 30 minutes. That's pretty wild. And now we're getting some turnaround. That's also wild. That actually looks like a good trade right there. Volume times in. Oh, that's a great trade right there. Let's throw that paper real quick. I think it would have been shit. Oh yeah. Oh yeah. 5 minute time frame. Paper trade. Potentially break of here could have entered. That fat ass retest was pretty crazy. Um, I probably would have entered this. I ain't gonna lie, and then it probably would have ended up like more of like a break even situation just to start it off. Cause yeah, I probably would have had probably would have had like a 25 pip stop, and it would have went into some type of profit. Yeah, I love it. I love it. I love it. I love it. Cause you can already see this situation. It just so happened that in this 15-minute candle, I love the retest though. I love it. Next hour, make it 21, 23. Man, ain't that crazy? Man, 2% already grabbed. Ain't that crazy? Hitting that's 2% right there. Hitting this is four. Whew. Already at it, man. Already. You seen it, man. Came here, first leg, literally retested it. Second leg, 30-minute time frame in there. Whew. 2% on that bitch. I love it, man. I love it. I love it. I love it. So it's almost like I'm thinking with this first 4 hour candle, when it just heads right for a direction and it just so happened to hit this major level, it could definitely exhaust. If this 4 hour candle exhausts bearish, boy, that was a trade of the session. Right there, trade of the session, trade of the day. Because that'll be literally nigga 90 pips back to the bottom. Got me fucked up. Let's just make sure we got some clear situations marking out. I'm gonna delete all this one more time. I really want to see structure. So I'm gonna actually just hit this line chart real quick. I really do want to see structure as of now. You already know. Oop. As of now, obviously we are heading up. You know what I'm saying? Key level, higher high. Key level, higher low. Put that bitch right there. Bam. I'm gonna actually delete this for now because I don't need it. Okay. Structure, and now we'll use these candlestick highs. Same shit for me. This weekly candle can definitely go fucking bearish though. I'm gonna let that be known immediately. All we got was a fucking wick fill, no bottom wick in the week. So yeah, structure was definitely down for some time, good amount of time. We got a wonderful triple bottom down here. Valid, Mr. Valid lower high was broken here, and ever since you feel me, this higher high, which was higher than this high and this high, this higher high made a higher low. Then it made another higher high past this high, and then we got another higher high. So as of now, structure is up from a phase. Here, let's bring this up here because I love technicals. Right? Is that not how you spell technicals? Am I tweaking? Technical. Bitch. Gonna piss me off. Shit. That's hella pips in between. All right, all right. I just had to see that real quick. So next, Just talking out loud. I put the 30-minute support here because really there's no support, truthfully, like in sight besides the low of this 30-minute candlestick right here. If you go to the 1 hour, it is not, you know, it's not a low on the 1 hour by any means. The low on the 1 hour is up here, and it broke that. So you can anticipate, I can anticipate that by breaking this candlestick low, retest, breaking this candlestick low, 5 minutes left, 30-minute time frame. If it is going to continue, there's a high probability that it could definitely just give some sort of, retest to some of these levels that it broke and then continue down if it wants to. But as of now, this is just light analysis, nothing crazy at all. You can see we pretty much, 15-minute time frame. This is a nice, especially because it created a support right here. So now we have a support at support. This is pretty much the second leg. Again, if it is going to continue, we have Wick Fillington for a total of 29, which is honestly a really good range. Also, a great reason to have gotten buys. Resistance first leg, came back up, second leg, it left, came back one more time, and then continued. Totally fine. I think that's why we definitely want to get entries as close as possible to like basically the resistance candlestick body close is where I want to enter. I think that is honestly a big help. Like first leg, because you can honestly say, bro, first leg of the pattern, candlestick body closes is where I want to enter after the confirmation. This is first leg. That's kind of a second leg. Then it left, and then it came back one more time. If entry was taking something like this before this wick was created, all we have is about 5 pips, so we'll just make our stop loss a nice little 20. Why not, right? 20 pips stop loss, 1 to 2. I mean, that's 4% right there. That's literally 4% right there with 2% on that bitch. First leg, yeah, that's love. I love that. I love that. All right, so we're gonna step back out of that basically the analysis right there. I mean, if you really want to finish it, the 4 hour time frame is gonna look something like this. I think I could delete that. 4 hour time frame gonna look something like this, right? Based off of this resistance here, you can either go to the next resistance. Based off the resistance we have right here that we're currently at, we can respect that resistance. Now I'm honestly gonna start aiming this way. Based off this support, based off the support we have right here, we can come down deeper to this support. And then based off this same support that we have here, we could not break it, false break it, whatever the case is, and come right back up into the range. And so as of now, based off of option 1, 2, 3, 4, option 2 is playing out with sales of the resistance. Until further notice, such as this level and beyond, we'll see. I definitely wanted to one more time see what price is doing at this support level because like I said, we have first leg exhaustion wick. The wicks on both sides are bigger than the candlestick body. We had a retest to the top, a push down to the bottom, potential break, and continue for the wick fill on the 15-minute time frame. But that's enough of that jibber jabber. Just a little, we love technicals, and there's no rush at all to trade this first week. Right now, we're just getting in the flow. Read our articles, mark out our charts, come during our volume time, Asian pre-London, and let's get deep in the flow. So right now, this is just knocking the kinks off, getting the edge off. You know what I'm saying? New year, it's love. So the title of this article is Gold Closes in on 6-month high. Markets look to smaller Fed rate hikes. So smaller Fed rate hikes may be temporary dovish action within the US dollar. And then from there, we can see some gold strength. And we would like to make sure when we do buy gold, if it is going to continue to go up, X, Y, and Z, then we would like to buy at supports, period, point blank. So gold prices rose on Tuesday and came close to a 6 month high amid a growing number of bets that the Federal Reserve will slow its pace of rate hikes even further, which is expected to weigh on the dollar and treasury yields. While the yellow metal closed 2022 a shade lower, it is expected to benefit from a slower pace of rate hikes this year, with recent data indicating that U.S. inflation has likely peaked. Rising interest rates had weighed heavily on metal markets off the rip, you know what I'm saying? Off the rip, we're looking at potential. Man, I'm getting in this journal real quick. So in my journal, basically, I'm writing because typically I have about 3 or 4 strong economic pillars that I typically just focus on to really move the market. The first one is interest rates and inflation. So the interest rate cycle is looking like, quick sentence, the interest rate cycle has been um, in an increase, has finally slowed its pace, and investors are eyeing um, a more dovish U.S. central bank, in turn bringing some strength back into the metal, into the precious metal, gold. Right. So and then another sentence on inflation. Investors believe inflation has peaked as we have been seeing a rebound. So obviously CPI numbers, CPI, PPI, Fed funds rate are definitely three things that we're gonna pay attention to. So we got CPI report to keep an eye on it, PPI report to keep an eye on it, um, Fed funds rate, you know what I'm saying? Fed funds rate types, These are all, so you have data that is connected with these pillars as well. So investors believe inflation has peaked as we have been seeing a reduction. All right. Spot gold rose. Prices rose zero point 0.4 to 1831 an ounce. While what's that shit at right now? It's less than that right now. While gold futures climbed zero point 0.6 to blah 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 an ounce. Blah 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 blah. Both instruments were trading close to their strongest levels since late June. Wow. The yellow metal caught a flurry of bids towards the end of December amid growing speculation that the Fed will enact an even smaller interest rate hike in February. Markets are now pricing in an over 90% chance that the wow. Yeah. Yeah, man. After it raised by a relatively smaller 50 basis points in December. This also helped gold outperform most risk-driven assets for the year, even as strength in the dollar and rising treasury yields sapped safe haven demand for the yellow metal. Other precious metals fared far better than gold in 2022. We're not really thinking too much about platinum and silver. Focus this week now turns to the release of the minutes of the okay, and when's that coming? Nigga, the fourth. The fourth. Just know Capital Hungry, Mr. Jeevan said we'll be right back analyzing on the 4th of January. Hold on. Hold on. Hold on. This is why I say support and resistance, bro. That's why I don't even take. And this bitch is being retested. That's why I don't even take. There's no reason to try to take a breakout sell unless there's a strong fundamental economic event happening, and you really shouldn't even be in there to try to catch that volatility. You know what I mean? That shit could go stupid. So it's like this support, the break of it would have yielded coming down here, right? But this level had to be respected first. And look at that. Bounce, gone, next candlestick, hit the low. I mean, honestly, bro, again, though, again, you have candlestick. Hold on. You have candlestick low. Can, bitch. Candlestick body right here, right? Literally, literally, if this level is going to be respected, all I want is entry damn near at or right above this line. Stop loss, deepest wick is 11. We'll just make it a quick 30. And I mean, 1 to 1 was almost snagged for a 2% grab, respectfully. And if it would have broke, the reason why I do this, if it would have broke, I have 2% on this entire stop loss. 2% on the entire stop loss. If this level before going that way would have broke this way, I could have cut this at less than 1% loss, and would have held it. As you can see, I mean, it still went like 1.5. You know what I'm saying? Like type percent type shit. So it's pretty good, man. It's pretty good. And I gotta put this entry here. 2912. So I threw a. I'm just gonna say it out loud. I threw just kind of like a test, higher time frame weekly, swing trade idea on this sell. Coordinates. What is that? 2912. And so the entry from a lower time frame would appear to be kind of a fucked up entry, but from the higher time frame, it's totally fine. You know, but the entry is basically right there based off of, I mean, when you think about it, what is it, 2912? When you think about it and you really scrunch this in, basically it's like entry here, stop loss up there to take it this way with like fucking 4 lots on there. You know what I'm saying? That's totally fine. But all right. Oh, actually, I like the fact that it's making a support. I do. I do. Because it went up. and fucking came down as it's supposed to. Came down. We got a retest. Who knows what's gonna happen with the rest of this candlestick? But we got the push up, bang for the open, and then we got the nice first leg, second leg retest, 30-minute candlestick, 44 pips nizzied. Yeah, baby. I'm pretty sure we was done with this analysis though. So this is only here because we have a entry there. So I'll just make it pink. And then 15-minute very obviously I fucked this up. The entries in profit. That's what you know. Actually, how much? Because I got 4 lots right now. Yeah, like a few pips. Mm-hmm. Yeah, bro. We going crazy. Anyway, let's keep reading this article, huh? Outperform most risk-driven asset for strains. Don't care about the boom, boom, boom. Focus this week now is turned to the release of the minutes of the Fed's December meeting due on Wednesday. Tomorrow? No, today's Monday. Due on Wednesday. Markets will be watching for any more signals from the central bank on whether it intends to further slow its pace of interest rates in the coming months. Among industrial metals, copper prices jumped. Boom, boom, boom. All right, so we're gonna have to get the fundamentals in focus. I got you. So we're gonna put fundamentals in focus on the chart real quick. Look at that. Look at it. Real quick. Real fucking quick. We got the break at this level. But guess what always happens? See, if I would have took this is just what I know. What I freaking know is levels that are created are often retested. Levels that are often broken, such as this support, broken are often retested from the other direction. It just happens all the time. So it's so easy to have a strategy that says, I'm only going to buy at support and I'm only going to sell at resistance. So if price breaks through resistance, all I need to do is wait for a retracement or an exhaustion, get the first leg until that ends, and wait for the retest of that again. Once again, if I just say, hey, this is candlestick body closes are my entries, the outside wicks are basically my stop loss, and I'm entering in momentum of price basically going back up to retest that shit and then falling back through and saying, hey, here is about 9 pips. Let's just go times three. 9 times 3 is about 27. So let's just throw it at 27 real quick. Boom, 27 pip stop loss. And pretty much just go for like a 1 to 2 for real. And just make sure that 1 to 2 is like, doable. You know what I'm saying? But yeah, bro, that would have been it. And then at this level, we already, I mean, risk is always managed basically to like right here. You know what I'm saying? So with that being the trade, probably got like, it's lit. It's lit in a bitch. And you're just holding that trade with the first leg, 5 minute time frame. First leg, candlestick close, went up to retest, don't know how far it's gonna go. So we're just gonna say entries the candlestick body close. If it fails to break this and comes back down through here, just enter the sell. Stop loss up there. You're moving with momentum. You sold at a resistance. You're good. And look at this bitch run. And I threw a 40 lot. I have a 40 lot running. That's crazy. I have a 40 lot running at this pink entry. Currently up. Currently up. Currently up. $800. How many pips is that? Like 20? 800 fucking dollars. Yeah, that's like 20 pips, bro. Insane. 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 Love, love, love. Let's go to the 4 hour. And let's get some. Hold on. I know. I keep pausing it and doing all this extra stuff. This is just an entry. Fuck this. This needs to go away. All right, cool. That's just the entry. All right, 4 hour time frame. Let's go ahead and throw these. I knew that was gonna happen. Bitch went up here, created a pattern, broke support, even retested the support that it broke, and came down. Cool. We're just paper trading and demo trading the first week, man. Just doing what we do, creating the best habits possible. I've thrown one trade. It was based off the weekly coming up to the resistance and making a higher high, so I sold. I mean, it's honestly really simple. Sold. The entry ended up getting right here, and then we got there. So if I could have got a better entry, that would have been even greater. But I wasn't thinking about it, but I will next time for sure. So yeah, I want to throw these fundamentals. Where the fuck are my technicals? Well, those are far. Let's get these fundamentals. Fundamentals in focus. You can say week slash quarter. Yeah, because this ain't just for the week. This is potentially for the next few months. You know what I'm saying? So typically, I just focus on interest rates, inflation, any like major geopolitical political events, and only major ones because you can't just keep up with everything. But major geopolitical events at play as well, and then economic health, literally. So when I type this, right? Oops, oops. All right. So when I type these things out, fundamentals in focus. This is for the week, for the quarter. What is the interest rate cycle? As of now, interest rate cycle easing. That's it. That's all you need to know. It's easing. Inflation cycle. Inflation cycle easing. That's all you need to know. The fact that it's easing, bro. Geopolitical events, I'll figure that out. Economic, so we're talking, um, we're talking unemployment. We're talking unemployment. We're talking GDP. We're talking, you know what I'm saying? We're talking non-farm shit. I said unemployment, unemployment, economic health. So we're talking unemployment, GDP. We're talking, employment rate. We're talking, you feel me? We're talking, what else? You got, and I have a whole journal full of it. But employment, GDP, unemployment, GDP, employment rate. Um, shit. Let's just go jobs. Jobs data, growth domestic product data. Just that basically is the same. Jobs data, gross domestic product data. Um, Said nigga, are niggas employed? If niggas are employed, then we can get some shit done. Let's see on the economic calendar. Let's check the economic calendar, and we're gonna do a quick rundown. Let me use the restroom real quick though. I'm gonna do a quick rundown. There's something else I wanted to look at, but just know that was a good ass trade. Yeah, little, you know what I mean? A little thrower, a little 40 lot, casual. Anyway, do your dance, bitch. Oh yeah. Mm. All right. All right. So what we got going on is on Tuesday for the US dollar and then some of the other ones. New York session, we got final manufacturing PMI. It's looking like it's going to be the same. It's also a low impact event. Actual greater than forecasted good for currency. Above 50 indicates industry expansion. And when the interest rates start going down, we will start getting that industry expansion. Above 50, blah, blah, blah. The previous listed is actual. Well, it's a leading indicator of economic health. You see that? It's a leading indicator of economic health. Businesses react quickly to market conditions and their purchasing managers will cool, cool, cool. Even though it's a low impact event in terms of it's releasing and the impact on the market is low at that time. Hold up, hold up. Sorry. Yo, that's crazy. I was actually about to call you like 1 minute ago. Um, hold on. I'm live streaming right now. Let me see if I can. I don't know how to mute it. Are people on it? Um, that should be good, right? Let me go 50. All right, that should be cool. All right, let's get back to it. So yeah, so tomorrow, final manufacturing PMI. Then you got construction spending, which is looking like it's a bigger negative, so it's less. Got it. And then you have some things for like, boom, boom, boom. Now Wednesday we have FOMC meeting minutes like motherfucking investing.com said. Usual effect, more hawkish than expected, is good for currency scheduled 8 times per year, 3 weeks after the federal funds rate is announced. It's lovely because this is about to come out again on the Wednesday. So the next one's February 22nd. Nice. It's a detailed record of the FOMC's most recent meeting, providing in-depth insights into the economic and financial conditions that influence. So basically, this needs to be. I need to see. I need to be able to read what this is, know exactly where to get it, and read the meeting minutes. Like that is going to be very important. And then once again, you got the JOLTS job openings. What's JOLTS mean? Job opening and labor turnover survey. Okay, actual greater than currency is good. Greater than forecast is good. They are looking at potentially a little less. They're looking at a little less. That's not good for the US dollar temporarily. And then if they're dovish, that's also not good. So you could really potentially see Wednesday and Thursday gold go up for real, for real. And then ADP non-farm employment change. It looked bigger. Hold on. ADP non-farm employment change. Okay, it looks bigger than the previous. So that could be good for overall economic health. And then Friday, NFP, baby, to start. And then, and then, nigga, and then, here's my week right here. So my week right here is gonna consist of, shit, what's this? Friday the 6th. We got non-farm employment change. They're looking at a smaller number. They're looking at a smaller number here. That could be bad for the US dollar. And so if we get lows created this week or something to go into next week, as that is my first week trading live, then definitely be confident in taking those buys at support for sure. Because then we got CPI next week on Thursday, which is going to go into the overall inflation conversation, the interest rates conversation, the unemployment claims are going to go into the fucking economic health conversation and situation, natural gas, federal budget balance, prelim, UOM, consumer sentiment. Man, it's looking like a bust me down 97 day. Let's see economic health, jobs data. So these things are coming out. I mean, at the end of the day, I do want to find out what type of geopolitical situations are affecting the currency market right now. I'm literally gonna Google that question. What geopolitical? I'm gonna just say geopolitical events affecting global economy. Affecting global economy. The Wall Street Journal, huh? Why not? Why not? Wall Street Journal. Why not? Huh? Hold on. Hold on. Wall Street Journal, I'm here. Markets. What they talking about? What they talking about in the Wall Street Journal for the markets, huh? Is it on it? Am I on it? What we got going on? Is it moving slow? What we got going? It's the same shit. It's the same shit. Wall Street Journal. Suck my dick. Markets coming up. 5% interest savings account. Buffett stocks to buy. Man, Jim Cramer stocks to buy. Top 10 dividends. Highest dividends. Best dividends. 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 More market tumult as rates keep rising. 5 minutes ago, investors brace for more market tumult as rates keep rising. The era of ultra low bond. Okay. Big banks predict recession. Fed pivot. Big, more. mm Nigga, economic downturn? Come on. Rookie traders are calling it quits and their families are thrilled. Crypto blah. So you worked for FTX now what? That's crazy. Definitely gotta read that. Big banks predict recession. Fed pivot in 2023. More than two-thirds of economists at 23 major financial institutions expect the U.S. to have a downturn this year. I'm taking a picture of that. I'm sending it to the little bro. Damn, I probably parked right in front of the fucking house again. Didn't even move that shit back. I could listen to the article. I'm gonna read it, but the fact that I could listen to it, that's lit. Hold on. Wait. Pause. 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 Hold on. $2 per week. Continue reading your article. I can't even read it. What the fuck? $2, man. You told me enough. More than two-thirds, man. Whatever. Two others are predicting recession too. Said it's coming at some point. Gold to the moon. When it comes down to I guess I didn't even do. Hold on. I want to know about geopoliticals. I want to know about the geopoliticals. Geopolitical issues. Peterson, blah blah blah. Sponsor. Boom boom boom. That trade. Inflation fight. Mm, mm, sponsor. I don't know what that is. Let's see what they're talking about. I don't even know. Wait, December 20? They wrote that shit like 12 days ago, 13, 14 days ago. Don't start with me, bro. Key political issues that will define 2023. El País took a look at four major problems the world would have to contend with in the new year. The war in Ukraine, still. The fragile relationship between the West and China. Oh shit. Climate change and economic turmoil. Just as easy as that, right from the goddamn article. Bow. Look what you got. The war in Ukraine still going on. The fragile relationship between the West and China. And then climate change and economic turmoil. Wow. Look at that. Look at that.
Oh, nigga, hold on. Bro, hold up. Long ass goddamn. That's better. Said major geopolitical events. The war in Ukraine, the fragile relationship between the West and China, climate change and economic turmoil, economic health. See, fundamentals in focus for the week and the quarter. Market. Love the 1 hour support being formed at this resistance. We have an order block. Still would want this sale to come from right there. From somewhere up here, literally, bro. Like this right here. I don't even want to add the extra line, but that right there is definitely the sell right there. Look, even a tad bit higher. There, that's how you snipe me. That's still the sell. First leg, retest, boom, hit that. And that was just, damn, that's crazy. That was just a 40 lot from here to here, bro. Mm, 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 mm. All right. I'm gonna call that good for this analysis session. I know there was a couple breaks and things like that in between, but we're gonna call this one good and understand that always try to have an analysis session before having a trading session. So ideally, as soon as I get home from work and all that good stuff, definitely have an analysis session before ever taking a trade. And I think it'll be analyzing Asian and trade pre-London, to be honest. Honestly, I think that's how it's gonna have to work because with my job and still needing to work out, cook, eat, and all that good stuff, I think the best thing to do would be to just comfortably go to work, come home, go to the gym, come home, cook, eat, shop. My fault. Hold on. Go to work, come home, do an analysis session for Asian. Go to the gym. So boom, go to work, right? Work. Man, we're gonna draw this shit out just cause. Why not, right? We're gonna go. We're gonna go work. Terrible, terrible W. Work. Then, then analyze. right? Then work, analyze, gym. Feel me? I'm gonna call it get right, but I'm gonna put it with the R. Get right. You know what I'm saying? That's eat and everything. So work, analyze, gym, get right. That's shower and eat, and then maybe even meditate. Get right, meditate slash read, right? And then London session. Hold on, trade London session. Sleep. So you got from sleep, I'm gonna go to work. From work, you're gonna come home, do an Asian analysis. From the Asian analysis, we know what we're looking for. We'll go to the gym. From the gym, we'll get right with a shower, some eats. You feel me? Then we'll take some time since we're showered and fed to meditate, read, write, whatever you want. Then after you're done with that, we're trading London based off Asian session of Asian movement. After we're done trading, go ahead, go to sleep, and then boom. So work is like shit. Sleep is like 6 to 8. Work be like 8 to 9. Analyze for like an hour. So what is this? It's like we'll just call this 7. So 7 plus 8, that's 15. 15 plus 1.5, that's 16 and a half. Plus the gym for ones, that's 17 and a half. Plus the get right, let's just call it 18. Actually, it's gonna take longer than 18. Let's call that 18, 18. Let's just call that 19. Meditate and read, let's call that 20. And now we got 4 hours to trade London.